Hi and welcome in this video. I'm Stefano, an Excel coach and a trader with 4-year experience in the index market. In this video we will cover this important aspect related to the imbalance. And imbalance is a very important topic you have to understand if you want to enhance and improve your strategy, your trading strategy. And you can use imbalance in two ways. You can use imbalance if you want to wait for a retracement during your trading game and you want to wait the price in your trigger area and there is an imbalance, you want to get the trade here, or if you want to understand the direction of the market, maybe if there is a huge imbalance like in this way where the market just went up without any retracement and you know that the price have to fill and have to cover this type of imbalance. So let's see first an example in which I will explain you what is an imbalance. So let's assume that this is a sell candle with this spike here, and then you have another candle that starts here, right? And this is a sell impulse, okay? And then you have another candle here that starts here in this way with this little spike here. And as you can see, in a higher time frame, you will find that maybe here this is a little retracement, price retrace the, for example, if this is a 4-hour candle, those are 4-hour candle, you will find that inside this little spike you could have a sort of impulse and retracement in in 1 minute, 3 minutes, 5 minutes, and you will find that inside between this spike, the end of this spike and the end of this spike, you will have a gap here that starts from here until here. In this point you will have the imbalance, and this is a gap in the market, and usually the market come back in this zone, it react and it will give sometimes a reaction. And it's important to understand that if you want to understand where the market have to go, that sometimes the market have to cover some zone, and it's important to understand and identify every gap in the market that in this case is called imbalance. And maybe you could find that sometimes the market start to skyrocket to the upside or drop down to the downside, and you could see that the market maybe, in this case, let's draw a little bit bullish trend. Those are bullish candles. And you could find that the price here didn't retrace. Maybe you could have a single huge candle in this way. Maybe let's draw it better here. You will find that maybe the price is going up. This is an impulse, this is a retracement, okay, and this is another impulse, and this impulse is formed by a candle like this, with a huge imbalance. There is no any retracement inside this candle, and the price have to come back with a retracement and fill this only buy candle. You know, the price have always, or I would say usually, have to cover the full candle, the full inefficiency. We can see the gap that you can find inside this large impulse, and then have another impulse, and then the price have to fill all the imbalance inside this candle. That's the nature of the retracement. There are retracement in the market exist more or less 99% of the time, because there is an imbalance to fill. And if you're able to understand and identify the imbalance, you will understand always where the price could react, okay? So for example, here, as you can see, in this situation, it's not important if the price then drop it down, it's not important, but you have to understand that in this case, let me go back in the past. As you can see here, we had this imbalance. As you can see, we had only bullish candles. Here, the market is not genuine. It's not genuine because in a genuine market, as you can see, here all the gaps are filled. There are no gaps here. There was this gap here, but the market with this candle covered this gap. here and here we had a gap, as you can see, only bullish movement, and then the price came back filling this gap and then went to the upside. Okay, as you can see here, for example, here there was a gap, and then sometimes the market don't fill the entire gap, but it's not important. Sometimes the price just covered the 50% of the imbalance. As you can see in this zone here, the price covered the 50% of the imbalance, but here we had an inefficiency here, another imbalance here. The price came back, filling the 50% of the imbalance, and then went to the upside. Price has always to fill the imbalance. Here we have an imbalance to fill, and the price sometimes we will see maybe in the next month, year, days, the price and the market don't have to fill the imbalance right away. Sometimes you just have to wait, but you have to understand that here there is an imbalance to cover. And in a future, if the price will drop down, you have to understand that there is an imbalance to fill, and then you can use that as a target. As a target in which the price could give us a reaction. But you can use that as a target or as an evidence if you want to wait for a reaction. But in this case, I will use that as a target. And you can see here, as you can see, the price went up to the upside, leaving a huge market to fill. We just have only bullish movement, but the price have to create the counterpart, the sell counterpart. So you have to know that the price have to fill this zone. And as you can see, price later came back and filled this gap. Then it gave us a reaction. Then the price decided to went down, but it's not important. We don't care if the price then went to the downside. There are other reasons. You have to analyze the trend, the divergence, maybe we had a point of interest, had a higher time frame in that zone. It's not important. You just have to understand that if the price is leaving an imbalance to fill, more or less in a different time, the price could go down and fill this imbalance. Then let's see that here we have this imbalance here. As you can see, this candle we had this engulfing here, and this engulfing has been covered with this spike here, covering this imbalance, but we left this gap here, and this gap has to be filled. Then we have also this imbalance here to be filled, okay? And the price, maybe not in this case, but I don't remember what the price did. Yeah, as you can see, here we changed the structure, we created liquidity here. It's true that the last dominance, the last demand that create an higher high was this one, but as you can see, price start to broke this order block, and the power, the pressure was sell. So you could get this retracement because you know that the price it's unusual, it's strange that the price starts to create another higher high in this point after creating this liquidity. You didn't have the confirmation that the price broke this last demand zone, but as you can see, the pressure was very, very strong. And as you can see, you could wait for a retracement in this zone, and you knew that the price had to cover this imbalance here and this imbalance here. And as you can see, price just dropped it down, covering this and this one maybe. Let's see. Yes, perfect. And now we are in our time waiting for the new week, because it's Saturday and for now index markets are closed. And it's important to understand that. So let's see the last example with a retracement. If you want to wait the price in a very, very good zone, maybe let me looking for a trade you could get in the few past days. in order to see if there is a good trade. You can take in consideration using the gap. Let's see, because I trade in a 1 minute time frame, and in 1 minute time frame the market, it's just different. As you can see here, perfect. Let's see this trade. We are in a bullish situation. Also here, we are in a bullish situation. Look at that, bullish situation. The price is creating higher high and lower high. Perfect. We are in a bullish trend. It's true that we didn't have the creation of another higher high, but at the same time market create this impulse, this strong and fast impulse, and this slow retracement that lasts a longer time. Okay, so as you can see, we had this imbalance to cover. We had three fast and bullish candles without any retracement, and there was a gap here. The price came back perfectly, touching this spike, touching and covering perfectly this imbalance, and then the price giving us this reaction. So you could put there a limit order, a buy limit order, or you could wait for a retracement, for an evidence here with this huge bullish candle here, creating another gap to fill here. Perfect. And you could enter manually here after this retracement with the stop loss just behind the confirmation, and the price just went a little bit in drawdown, but then it changed the direction going to the upside like the bullish trend. Or if you wanted, you could put the entry here, or maybe a little bit higher if you want to cover the position with the spread also. But as you can see, price went to the upside, covering perfectly this imbalance. And then what happened? There were also here all the imbalance were filled, so no problem. But as you can see here, the price continued with this, kept this bullish trend, leaving here this huge liquidity zone, this I would say like 4 or 5 top liquidity, okay, this way. For about, I don't know, for triple top, double top. It's a liquidity zone. That's important. And as you can see here, the price just left this imbalance to fill. We had this zone that has to be filled, and as you can see, this is better. As you can see, this one was filled with this little spike, but this candle didn't have filled. And as you can see, price came back here, giving some reaction. And as you can see, you could get inside here, maybe after this engulfing candle, leaving this imbalance, you could get the entry here, putting the stop loss just behind this zone. Or if you want to be more sure, you can put the stop loss just behind the zone. I recommend you to be more aggressive in order to have an higher risk reward ratio, and putting the TP, the take profit, on this liquidity zone. Or maybe if you want to get an higher risk reward ratio, you can put the target just over with the Fibonacci extension, like 25% of Fibonacci extension, I don't know, it depends, or another imbalance to fill in the past, or maybe in this last high, okay? It's up to you to decide where to put the target or the stop loss, but it's important to understand in this video the concept of imbalance. And then here, we had another retracement. Here we had this impulse that broke all the previous structure to the upside. Then the price came back here. There were another imbalance to fill here, okay? And the price reacted perfectly. I can understand that maybe you didn't want to put an entry as a buy limit here, because the speed of the price that dropped it down so strong, and maybe you was pretty scared in putting just a buy limit here waiting for the price to go up. So you just could wait for an evidence here. As you can see, price created this bullish candle that just a little bit covered this previous sell candle, and with this other candle the price just left here an imbalance to fill, and you could put an entry here. Let me show it better to you. We had this candle, and then price gave us this another candle, leaving us this imbalance to fill. You could put the entry here with the stop loss behind, below the reaction, putting the target. I don't know, I suggest you to make just a little bit, at least 1.3 risk reward ratio. So, and the trend was bullish, so you can look for a target. In the past, we had this the end of the Asian session, so you could put the target here, or as you can see here, we had imbalance to fill that price didn't cover before. So this was an imbalance to fill, and here there was another imbalance to fill. So if you want to get partial profit, you could take the profit here, a partial profit, or maybe the last profit here, 1.18.4. And let's see, the price came back, filling the imbalance, went to the upside, getting the first target. Okay, the price went up, and I don't remember honestly if the price covered the and filled the last take profit. I don't think so, but as you can see, price later came back here. But as you can see, the first target was taken, and maybe here you could get we had this liquidity zone that price covered perfectly. So if you didn't want to use this imbalance as a target, you could get this, you could take the profit here, and the price, as you can see, filled the liquidity and hunted the liquidity perfectly, reacting just a little bit over this zone. So for this lesson is all. I hope you understand that lesson. I hope you are going to test what I explained you in this video. I suggest you to back test the imbalance and understand that you can use imbalance both for understand the direction of the market in order to fill the imbalance, and as a reaction if you are inside an impulse and you're waiting for a retracement. So watch this video again and again. We will see in the next one.